Footlocker, Footlocker, Footlocker has kicked us to the curb, absolutely made us go into deep despair. If you own this stock, you must be thinking, why did I buy it? It's absolutely crashed down to earth and absolutely gone right down to a bottomless pit and never going to return. Is that the end of Footlocker? Are they going to go into bankruptcy? Or are they going to find a way out and return to profitability? Let's get to it right here, right now at Barry Charles as we do a stock analysis on Footlocker as we look at key metrics of this stock to see if it's worth a buy. And at the end of this video, I'm going to give you an intrinsic value on Footlocker and see if it's possibly a good time to buy. Or is it time to hit the road jack and say this stock is not for me? Let's get to it right here, right now on Barry Charles. Welcome guys and gals to the channel. Barry Charles is here. Yes, Footlocker has been one of the big talking stocks recently with the cutting the dividend. Absolutely not just cutting the dividend, they got rid of the dividend. Paused it for now, but for how long? That is really, really sad. And especially if you were in the stock a year or so ago at very high rates, it's now crashed 50% and more. Very, very depressing stuff. But can we turn it around? Can we turn Footlocker around? Is this the time to start buying, or do we wait even longer as the recession could be coming? Well, let's get to it right here, right now. Revenue in 2022 of 8.8 billion. So yes, they're doing very good there. Very, very good. But this year is not looking so good. Not looking so good. Looks like it's going to be a drop in revenue, so it's not looking good for anyone out there that is looking to invest in the stock. Net profit. This is again something that's not looking good as well. 342 billion, but it's expected to be half of that in 2023, and absolutely just not looking good. And here comes the daggers, folks. The daggers here at home. If you're a shareholder in Footlocker, the daggers going to keep coming. Free cash flow minus 143 million. So they are losing money right now. They've had to spend money to try and save themselves. It's not looking good. They were positive in 2022, but it's just absolutely gone into train wreck. And just to add salt to the wound, long-term debt, 450 million as well. It's not super big, but still compared to where the free cash flow is, they cannot pay it right here, right now. That's why they can't pay the dividend. That's why they had to heave out the dividend. So that's not good. Not good at all. Earnings per share, 1.34 currently, and the PE ratio of 13.5. Well, the way it's going, I think this stock could be at a 7 PE ratio very, very soon if the news continues to get worse and worse and worse and we hit recession mode. If that happens, it's time to run away and try and find some better play. But looking at looking at assets versus liabilities, this is where it's a little bit more positive. 2.3 billion in assets compared to 1.4 in long-term liabilities. So that's positive. It's nearly 50% more, not quite, but 40% more in total assets compared to liabilities. So that is a positive for you out there. What about shares outstanding? It has been a smooth ride the last few years, but now at 94 million. But it hasn't been so good over the years. Yes, I mean, it has been good, but just recently, it's starting to change and it's starting to creep back up. Whether that continues, I think it will. They'll be trying to get more and more money, so expect more shares let out to try and entice more buyers into the company because they are struggling to make decent money at the moment, and that is a big question of shares outstanding. They have been good at not diluting you, but in the last couple of quarters, the dilution is starting to happen. So that's not a good sign if you are a shareholder in Footlocker. But yes, a lot of work to do for Footlocker. So what can you do as a shareholder in Footlocker? Do you run away now and hope for better days in another stock? I personally believe it's probably no. You got to stay in the stock. This is all the possibilities can go to bankrupt. Don't get it wrong. Footlocker, we have a recession. This company is in danger of being one of those companies that goes into receivership. I don't think it'll happen, but there's a possibility. Let's say a 20% possibility for Footlocker to go into. So if that's too much of a risk tolerance for you, walk away now. I'm telling you now, walk away now. You don't want to have to stress this, because if we go into a recession, this stock is going to under $10, and then you start seeing super value. But yes, that and with that free cash flow minus, if it continues to be minus, not looking good. Not looking good. They're going to have to find a way to get themselves back into the positive in the free cash flow, and they're going to have to do it quick. But yes, but for me, what does Footlocker have to do to get themselves back on track? Sell more sneakers. Simple as that. But sell it at a better profit rate. Because what has been happening over the last 6 months, or even the last couple of years, is they've had a lot of inventory and they've been selling it at cheap rates just to get the stock out. Get the stock out of storage, all that sort of stuff that's costing them money, and taking the losses along the way. So they're obviously going to use that for their taxes, which is going to help them, but it doesn't help you as a shareholder right now with the books not looking good. But they're trying to turn it around, and the new CEO will be doing all she can to try and save this company, but they're going to have to really get rocking and rolling, because it's not looking that good at all for you as a shareholder right now in Footlocker. But I do have faith this company's going to turn it around. To be honest, it's not going to be like a game changer change, but I have got a price for you, which is right now looks very exciting if they turn their earnings per share and all that around. So there is a possibility. The likelihood of it getting there, I'm not sure, but we're going to have a look at it right now. Intrinsic value through the Graham calculator. So we're going to say Footlocker right now is an $18 stock. It could be a lot higher or lower from when I've done this recording, but we're just going to say $18 stock right now. With the earnings per share at 1.3. With a 5% growth rate, gives us an intrinsic value right now of about $25, which is actually in the negative right now. But you could say that's probably a fair estimate of where this company is going to be over the next year or so. So it's probably not going to be any worse than $25. But if it can somehow get back to 10% growth rate, then you're starting to look at a $38 stock. Just with the current earnings per share. But if they get back to normal and really get the earnings per share back up to like about a $3 mark at the 10% rate, the stock is a $90 stock, possibly a $100 stock. Now, that a lot of things are going to have to go right for Footlocker for that to be the case, to be real profitable for them. They're obviously going to have to sell sneakers at a better rate, and they're going to have to get whatever their leases down. They're really going to have to improve this stock overall to really be a thing. To me, it's a bit of a catch-22. I think if you haven't invested in this company, it's a bit of a, you can invest, but at your own risk. You could lose all your money, or it could go down in half if we have a recession, and then it'll go back up. If you've been in the long term, it depends on your tolerance, because you could be down 75% in the stock. But no financial advice here. Absolutely all up to you about any investing, but to me it looks like a buying opportunity. You could wait and hope for it to go lower. I think it's going to be here for quite a while, to be honest, and just keep buying all the way into 2024 and wait for the flip and look for your money to return. Obviously a dividend return will obviously help the stock jump up pretty quickly. Whether that happens or not, I think you might be looking a year away from that, at least from happening. If it even does happen, there's no guarantee you're going to get the dividend back. But anyway, that's just a little bit about Footlocker. Hope you liked this video. Remember to like and subscribe to the channel. Click the notification bell so you get all my videos when they come live. Anyway, have a great day out there, my friends.